Good morning, everyone. We'll give it just 1 minute until we actually start, just giving everyone a chance to get connected to the audio. But let me go ahead and share my screen for us. All right, good morning, everyone. Um, we'll get started right at the 8:30 mark, so give it just a little bit here. I just want to make sure everyone gets connected to the audio, but we'll get started here in a minute. All right, good morning, everyone. My clock still shows 8:29, so we'll give it just one more minute here, just to give everyone a chance to get logged in. But thank you for joining this morning. Okay, so my clock says 8:30, so we're gonna go ahead and get started. So my name is Laura Straub. I work at Ent Credit Union as a community educator. So I get to go out and teach personal finance classes out in the community, as well as some of these webinars. So really happy to have you all here this morning. Today, we're going to be talking about a kind of fun topic of achieving financial independence. Now, that can mean a lot of different things to a lot of different folks. So, hopefully, we'll touch on what you think financial independence means. But let's go ahead and get started. So, key takeaways I hope that you get is evaluating your budget, right? So, if you haven't joined one of our webinars before, we talk about budgeting quite a bit, but that is essentially that foundation of any type of financial success. So, we will talk a little bit about evaluating our budget. We'll also talk about setting some milestone goals to reach those financial independence markers that you want, as well as some investing checkpoints for you all. When it comes to financial independence, having some investments might help you achieve that a little faster. So we'll talk through that. So those are three big takeaways that I hope you get from today's webinar. So what is financial independence, right? So when we're talking about what that means, how I'm going to describe it is financial independence means having the freedom and flexibility to make choices that align with our goals without constantly having to worry about money or having anxiety around money. And it's about feeling secure and confident in your day-to-day life plus your future. So that is what I'm talking about with financial independence. Some folks might attribute financial independence as maybe not having support from family and being truly independent in that way, whether it's you're moving out or something of that nature. But for today's class, that's not really what we're talking about. Financial independence more is that freedom of choices, as well as not having to constantly be worrying about our money. Okay. So, ways that we can kind of get there or think about it is with that destination to financial security or that independence that we're talking about is knowing where we're starting from, right? So we always have to check back, what do we have right now? What are we doing today? And is that going to help us get to that future self? Okay. So where are you at right now? Do we have checking and saving products? Do we have investments that are working for us? Do we have credit card debt or other debt that we need to tackle? Right. So, asking all of those questions, really getting a good picture of our current financial state. The next is figuring out what we do want. Do we want to pay off our debt? Do we want to own a home or have a trip planned? Um, do we want to retire in a retirement home or do we want to retire in the family house? All of those types of questions of those big far off places, but also in the next like 2 to 3 years, what are some of those goals that we want to accomplish? Now, the biggest question is, how do we want to spend our money and why? Oftentimes we get in a rut of spending money just on habit, spending patterns that we have. And we really want to take a better look at that and figure out, is this working for me? Is it not working for me? Are there things that I can do to change the way I'm spending money? Oftentimes, I know when I reflect on this, it is those impulse purchases. So, really being aware of your own impulse purchase kind of triggers, if you will, might come into play to kind of keep you on track in that financial journey. Okay. So when we're thinking about this and designing our budgets, we want to reflect it back to those values that we have. If we cut out all of the fun, good stuff we have in life, we're not going to stick to that budget long term. And it's going to be really easy for us to overindulge in the things that we do want to be spending our money on rather than reflecting it and realigning it back to our values constantly. So, things to kind of keep in mind is when we are thinking about our values, there's a values worksheet that we can send out to you guys. But just really thinking about all your values. So, family is a good one, pets, right? Maybe it's travel, maybe it's entertainment or community. It could also be music is a really big value of yours. So, incorporating those things within our budget can then keep us on track to actually attaining those goals that we want to have in place, but also making sure we're fulfilled in our day to day lives. So we're not going to be overindulgent in some of these categories if we're never fulfilling them. So creating a value based budget can just kind of help you align with where you're spending your money and making sure it's purposeful for you. Now, this doesn't mean that we're going to not pay our bills and things like that and focus just on our values, but just sprinkling in some of our values within our budgets in our day to day lives can really help us, again, stay more fulfilled within that budget, in that space of spending our money the way we actually want to be spending our money rather than impulse buying or having random splurges. So when we're thinking about budgeting for those values, figuring out how much you can realistically spend on those values. So if your value is travel, but you can't spend that much on travel, what are ways that we can make that an option for you to still get that value of travel? It might mean maybe just some day trips until we're able to save up enough for a big trip somewhere else, right? If your value is family time, then what does that look like for you? What kind of things do you want to make sure that you're incorporating for your family within your budget? It might be every Friday night, like a big fancy kind of meal at home. So we just want to make sure that we're including that within our grocery budget for that value of, big family cookout. Okay. The other big thing is evaluating our other top priorities, whether it's experiences or food, like I said, or savings. Maybe your top priority is paying off your debt. So we want to make sure that's in alignment with everything else that we have going on. Now, the biggest thing to achieving your financial independence is going to be tracking your expenses. So find a way that you can keep track of your expenses so you're aware of where your money is going, how much you're spending on different things, especially that grocery store money, right? It's really easy to overindulge at the grocery store if you don't have a list and you're not always tracking that and keeping back to that budget of how much do you actually want to be spending in these categories. Okay. So find a way that you can track your budget. For me, it's a good old sticky note. I just list out all my purchases throughout the week and then I transpose it onto a spreadsheet for myself. So I make it fairly easier for myself in that way because I always have room for a little post-it note in my purse to keep track of those expenses. Other people find apps on their phones, things of that nature that they can connect things to that keeps track of those expenses. So just finding a way that works for you and then reflecting on how much you're spending in those categories can just be really helpful. Now that 50, 30s, 20s is just a rule of thumb to just kind of see how much are you actually spending on your needs versus your wants and just kind of keeping those ratios in mind and knowing sometimes our needs are going to be higher than 50%. So just kind of being more realistic with ourselves in that regard. Now, when we're thinking about achieving financial independence, our savings are really going to come into play. So, our periodic savings are going to be things that we're going to contribute to regularly and often. Okay. These are for those expenses we have throughout the year. So for me, for instance, car registration is a big one, right? Mine is due in September every year. So every month I put $82 into a savings account. So then in September, I have the money to pay for my car registration. And it keeps my budget more streamlined throughout the year. So then that way in September, I don't have to come up with a big sum of money for my car registration. Okay. Another one is holiday expenses. So putting a little bit away for those holidays, birthdays, etc. throughout the year can again just keep our budget more streamlined and consistent throughout the months. Other periodic expenses could be if you get regular haircuts or self-care things, those can go into those periodic expenses as well. The other thing is, like Amazon Prime, for instance, if you pay it yearly, that's just a good reminder to kind of put a little bit away every month for that expense that comes up occasionally. Okay. So whatever occasional expenses you have, kind of divvy it out throughout the year, be saving, putting it into, maybe a high yield savings account, so then you can pull it out, get some money for it. The other thing is that emergency account. So having that nest egg to fall back on, if you were to lose your job or a big medical expense comes up, or just something that you weren't expecting, having some money for those emergencies can really alleviate some stress, and kind of help you feel like you're more independent with your money. So a good rule of thumb for emergency account is $1,000. Some folks will say 3 to 6 months of your expenses should be in an emergency account. So whatever kind of makes you feel better when it comes to those emergencies or how much to put in there. Just work your way up to it. So set small goals throughout and then start adding to it over time. And then long term is really anything 3 years out. So it could be a down payment for a car, it could be a down payment for a home, education, retirement, etc. So just kind of breaking down our savings into those kind of three philosophies can kind of help us delineate like how much is going into what type of savings we have. Now, when it comes to setting those goals, so if we do have, a milestone that we want to hit, whether it is paying off debt, setting up that emergency account, or striving for, that true essence of financial independence for ourselves, setting smart goals will help us. It'll help us prioritize when we're going out shopping. If we automate it, it'll just automatically happen for us. So, really, anything that you can do to kind of make it easier for yourselves to hit that goal is what we're looking for. So, an example is if you wanted to save up $1,000 by the end of the year, how are you going to do that, right? So, if we were starting in January, we would divide 1,000 by 12, right? And we would get $84. So $84 every month is going to go into a separate savings share, where that way we know this is what that is for, that emergency account. And you're going to set up automatic transfers at the end of each month. So that way we know we're doing that. It's achievable and realistic within my budget to do that and accomplish and stick to, right? If that isn't realistic and achievable to stick to within your budget, adjust. Okay. It might be we need to save 1,000 by the next year and a half. Okay. Whatever it looks like for your budget. And then again, really setting up those automations or things that hands off, we don't have to think about it all the time. Okay, that'll make it easier for us to accomplish these goals if we can make technology work for us. Now, when we're thinking about financial independence, there are some kind of little milestones that we can maybe look at, right? One is to have 1 month of expenses and emergency fund, so that might be beyond that $1,000 kind of limit. The other is to have all interest, high interest consumer debt paid off. So high interest is typically going to be those credit cards, okay? So anything kind of above 10% interest is considered high interest consumer debt. So that's what we're looking at, is to have all of those paid off. And then the other is to have, once we've kind of established those, maybe then start looking at 6 months of expenses in a liquid savings account, whether it's CDs or small term bonds, etc., that we can kind of quickly turn to cash if we want. The next big milestone would be net worth equals your annual expenses. The next is 25 times your annual expenses saved or invested, right? So these are different kind of milestones that you can kind of check off, look for, strive for if these mean financial independence to you, okay? Now, to get that, especially with that investment pieces, is really understanding our own risk tolerance, okay? Some of us are going to be more risk averse. Some of us are going to be a little bit more prone to choosing riskier things. Okay. So you want to find your comfort with risk, whether you're conservative. So that means that you are going to pick things with low risk, but that means that lower potential return on that money is going to be lower. But you know it's a little bit safer. You're saving that principal a little bit more. Okay. Moderate is right there in the middle. Aggressive is going to be the higher risk, but the higher potential return. So you might get a better bang for your buck, if you will, if it turns out well, right? So that high risk versus high potential return. So risk and return trade-off here is what we're looking at when it comes to assessing our risk. And it's okay if some of our milestones, maybe we keep some in that conservative area and then we're okay with more aggressive, right? So it's okay to kind of have a spectrum of what your comfort is when it comes to investing. The other big thing is to kind of keep in mind your goals and the timeline for them. So our time horizons might kind of impact where we want to put our money. Again, for that kind of saving the principal mindset. Okay. So if we're looking to get a new car, putting in into a short-term mutual fund, savings account, high yield savings account is a more secure way for us to make sure that we're going to have that money in the 2 years. Where kids' college and retirement, we can kind of ride the wave of investments. Okay. So the market goes up and down all the time. So the longer the horizon has, the more of the time the investment kind of has to weather the risk. So if it goes down, we have time to kind of ride it out until it goes back up, right? So really kind of thinking through those of like, what is your time horizon with using this money for something? Okay. So the other big thing when it comes to financial independence is making sure we're taking advantage of some of our retirement accounts, okay? If you are at a workplace, making sure you're contributing enough to your 401k or 403b, whatever one they have. If they have a matching policy, please make sure you're at least doing enough to match that. So you're taking advantage of that benefit you have at work, okay? Now, individual retirement accounts, they can be traditional or Roth. So traditional is going to be through a workplace, where Roth we can get outside of the workplace. So Roth is after taxes money that we're putting into these accounts. So with 401k and 403b, there are some of those retirement accounts that allow you to do Roth as well. So having a blend of both traditional and Roth type of retirement accounts will help us when we go to retire for those tax advantages. Okay, so having the traditional, when we take our money out in retirement, we are going to pay taxes on it at that time. Where the Roth, when we take our money out in retirement, we're not paying taxes because we already pay taxes on those. So having a blend and a difference of those can help you in retirement. Now, if you're looking for those college plans or student or educational type plans, they can have you do a good tax advantages with the 529 plans and Coverdale, okay, if that kind of works for you. The other big one that kind of does some cool tax advantages is our health savings account, so HSAs. So these are for qualified medical expenses. Y'all, this also includes sunscreen, okay? So it can include some of those over the counter, if you will, things that we need for medical reasons, right? So sunscreen, toothpaste, even, as well as like contact lens things. So it can do a whole variety, not just, co-pays and like bigger medical expenses. So it can be really helpful. And again, it's that tax advantage because it's pre-tax money going into that account. So you're not paying taxes on that. So make sure you understand what your company, if you're working for a company that offers retirement things, has. if they don't have some of these retirement type accounts, know that you can get some of them off market at a financial institution or another type of place that offers retirement accounts. Okay, especially that IRA Roth account, you can get a lot of different places. Okay, so when it comes to that, know that you can set up with a financial professional. They can help determine your investment goals and timelines and those risks. So if you want to be really aggressive with your investments and get to that 25 times your annual salary in investments or savings, they can help you forecast like what would that look like, what would that take, how much can you put in. The other big thing, a financial professional can help you evaluate the market, right? And figure out kind of what's going on within the stock thing. They can also help create an allocation model. So when it comes to allocations, is it putting it all into stocks, all into bonds, a blend of that? So they can really help kind of model what that could look like for you. The other big thing is if you want specific investments, like if you're really into, I don't know, like Disney, you can invest in Disney. That was just what came to mind. Okay. Whatever kind of thing that sparks joy for you and you want to invest in it, you can do that with specific investments. Okay. So ent.com/investments is a way that you can kind of talk with somebody. They do a free consultation for you if you're looking to kind of start investing and building wealth in that way. Now, the other thing, again, we talked pretty fast about it, is that budgeting. Okay, if we don't have our budgeting under control, it's going to be very, very difficult for us to even hit our goals or even put money into investments because we can't plan for where our spending is going. Okay, so if you want to talk to somebody one on one about budgeting, our coaches are fabulous. You can book one ent.com/coaching, and they can really help you kind of just be that sounding board of your budgeting and your cash flow of how you're spending your money. Okay. Or if you do have that high interest debt, that's where they can really help with that debt repayment plan, kind of those strategies to kind of help pay down your debt more efficiently for you and your budget. So I know I talked pretty quickly today about this topic. Hopefully, you gathered a little bit, whether it's just kind of reflecting on your budget, what milestones you want to accomplish, and then some resources to accomplish those. So I'll go ahead and stop sharing here as well as recording.